Welcome to the C-Suite podcast from Money20 here in Amsterdam. My name is Barrett, and I'm going to be sitting down with some of the speakers and attendees here at the event to get a real snapshot of some of the main topics discussed. We're producing these episodes in partnership with LSEG Risk Intelligence, who provide a range of solutions to help organisations effectively manage risk and reduce fraud. Really hope you enjoy the episode. Well, pleased to say that I've been joined by Vanessa Hurdowar, who is Sales Director at LSEG Risk Intelligence. Vanessa, how are you today?
I'm great, thanks. How are you, Graham?
I'm really good. Thank you so much for joining us on the podcast.
Thank you for having me.
Not a problem. Now, we'd like to talk about fraud, as we often do with LSEG Risk Intelligence. If you had to pinpoint the biggest shift in fraud over the last, 12 to 18 months, which do you think is having the biggest impact? Is it the growing sophistication, the acceleration of attacks? Where are we sitting right now?
So honestly, it's not one of those things, but a combination that is really driving the shift. But if I had to choose one, I'd choose the biggest change being the scale and speed of the attacks powered by AI. So what used to take days or weeks, now building credibility, targeting individuals, can now happen in minutes at a massive scale. And at the same time, sophistication is really stepping up. So these aren't obvious scams anymore. They're highly personalized, contextual, and really indistinguishable from legitimate interactions. And so they're designed to exploit human behavior, not just technical gaps. And so when you combine that speed and sophistication with the digital impact, with the economic actual impact there is, it's not just talking about financial loss anymore. We're talking about operational strain, regulatory burden, and ultimately a loss of trust. And so the real shift over the past 12 to 18 months isn't choosing between speed, sophistication, or impact. It's the fact that all three have converged at once.
Okay, so given all of that, given that increased level of sophistication, AI is obviously posing a big threat here. This is more now than just even a series of attacks, isn't it? We're talking now about a broader resilience challenge for the entire market, I guess.
Yeah, exactly. It's moving away from an operational strain to more of a broader resilience issue. And the key shift here is that fundamentally the scale of the problem has shifted. So in a global survey that we recently conducted, 71% of consumers are now believing that scams are increasing, and around 1 in 9 adults globally have already lost money in the last 2 years. And so that at that level, fraud is no longer just a fraud team problem. It's a customer confidence and operational continuity issue. And what I'm seeing organizations lean into are these three key frameworks. So firstly, they are continuously monitoring risk across the customer lifecycle. So not just at onboarding, but at login, payments, account changes. Secondly, they are moving towards real-time risk-based decisioning. So keeping low-risk activity invisible, but stepping up controls as soon as behavior changes. And thirdly, they are trying to engage with the customer at the point of risk. Because, at the end of the day, ultimately resilience isn't just about stopping attacks. It's about how you treat the customer in that moment, and how do you keep them confident to transact, even when the attacks are constant.
Now, obviously, with, as you just alluded to with your survey, you're talking about the customers are knowing that fraud is happening on a more consistent basis. But there is a tension here, isn't there? Because as well as preventing fraud, everybody wants a slick customer experience as well. We want our payments to be fast as possible. We don't really want any friction at all. So how do you manage that balance? How do you decide when to introduce friction rather, and when to make the risk decision completely invisible to the customer?
Yeah, so this conversation continuously comes up. And, I think the key shift here is that you can't treat every transaction the same anymore. So The way that leading organizations are trying to solve this is by using a really practical risk-based approach, usually in a three-tiered model. So at your base, you have your low-risk activity. So these are your known customers with normal behavior. And the risk should be invisible here. So everything should be invisible. You're still assessing risk in the background, but the customer flows through seamlessly. And that's what protects conversion and keeps digital engagement high. And then you have your second layer, which is your changing or uncertain risk. So for example, a customer uses a new device, a first large transaction, or just unusual behavior. Here is where you can apply really lightweight targeted friction. So for example, a biometric check, a push notification, a step-up verification. The key here is that it's quick, contextual, and easy to complete. And then at the top, you have your high-risk scenarios. So these are your clear anomalies, your known scam patterns, or high-value transactions. And that's where you can apply strong intervention. So delaying the payment, escalating it, or stopping it entirely. So the goal isn't to remove friction, it's to be incredibly precise with it. Invisible for the majority, but targeted and proportionate when the risk spikes. And that is how you protect both the customer conversion, experience, and resilience at the same time.
Now we've got to move on to AI. You mentioned it in the answer to the first question. So obviously AI is helping fraudsters increase these attacks at a huge scale, but it's also helping organizations defend these risks as well. It's that classic battle between us and the fraudsters, isn't it? So specifically, where are you seeing AI having the biggest impact for the defenders, as it were?
AI really is giving defenders an advantage here. It's helping them make sense of behavior across channels, devices, and time. So, because fraud isn't a just one-time event, it's a pattern. And AI can spot connections at a scale that humans simply can't match. And so what I'm seeing whether organizations are doing this right is that they're applying a simple framework. So they have AI first to detect, so they're continuously monitoring behavior and surfacing risk signals in real time. They're using AI to then decide. So they're prioritizing which interactions require interventions based on risk. And then thirdly, they're using humans to intervene, because at the end of the day, where in those critical high-risk scenarios and moments, human context, judgment, and customer trust really matter. And human judgment will always be critical. AI can flag risk, but it can't understand intent, emotion, manipulation, and that's exactly what modern fraud scams exploit. Ultimately catching fraud matters, but how you handle the customer in that moment is what defines trust.
Now, as you've alluded to, things are changing very dramatically. It's becoming increasingly difficult to keep up with the wave of attacks, with the sophistication of attacks. Is there one fraud trend or signal that you still think is underappreciated by executives today?
Yeah, I think one of the most underappreciated trends in fraud isn't the loss itself, it's what happens to customer behavior and trust afterwards. So a lot of executive conversations today still treat fraud as a cross-line, but the data tells a much bigger story. So in a recent survey that we conducted, 97% of fraud victims change their behavior afterwards. So they hesitate, they delay payments, and they second-guess legitimate interactions. And so this isn't just this is a behavioral shift here, with a direct impact on engagement, revenue, and growth. And we're also seeing trust in core channels erode. So with AI-driven scams, 44% of customers are now less trusting of phone calls. And we're seeing a similar pattern across messaging and video. And so these are the very channels that organizations are using to try to engage customers are being degraded by fraud itself. And so the practical shift for organizations is this. Don't just measure fraud in losses, measure it in behavior change. Track your drop-off rates, your delays, your trust after in channels after fraud, and intervene on those moments. Because ultimately, Graham, the hidden cost of fraud isn't the loss, it's the customer who never comes back the same way again.
Yeah, well, I think that is an excellent way to wrap up this interview. So, Vanessa Hurdowar, thank you for joining me on the podcast.
Thank you so much, Graham.
Well, I'm pleased to say that Will Marwick has joined me now. He is the Chief Executive Officer at IFX Payments. Will, welcome to the podcast.
Thanks for having me. Looking forward to it.
Excellent. Now, let me take you back to last year's Money 2020. I was reading an interview you gave there where you spoke about how IFX has successfully transitioned from being an FX brokerage into a payment and alternative banking fintech. So I just want to know, 12 months further down the line, where does the business stand today?
Yeah, look, it's a good question. I think that transition's very much accelerated over the last 12 months. FX and currency risk management very much still forms part of our core capabilities and I suppose who we are as an organization. But the last 12 months has been really about transitioning more into that payments and FX infrastructure, both to fintechs on an embedded basis, so helping them with access to domestic and international payment rails, different currencies, operational sort of processes and treasury management systems through one simple API, and then also for businesses, so to be able to help them with their currency exposure, whether that's through spot contracts or hedging on a forward basis, and then giving them collection accounts to manage their money movement overseas. I suppose for us, we see now payments as a central component to what businesses and fintechs need for their treasury systems and basically how they're thinking about payments moving forward. So, we're here to release iBank 2.0, which is our new platform, and we see that as the next evolution for our system. And so we're really excited to be showcasing that Money 2020. We've brought our new leadership team here today with Anastasia Evans, who's our new COO, Adam Dowling, our new CCO, and Marit Ates, who's our new CPTO. So we're really excited about sort of, I suppose, the next stage of our journey, really being that FX and payments, fintech.
Well, let's keep on the subject of payments. There's a lot of focus on speed, user experience in payments, but what about the flip side to that, the risk and the cost? Is there enough focus there at present?
You know what, I would say probably not. I think the speed of a payment is kind of standard now in this industry. I think people really expect money to move almost instantly these days, but really it depends on who your target customers are. Retail customers, for example, they want their money to move quickly. Getting money, across to a friend within a couple of seconds is important to them. But in terms of managing risk and cost, that's something that I think businesses see more as something that is important to manage. What makes an efficient payment? Well, it might get there really quickly, but if it gets held up through fragmented banking ecosystems and poor data and compliance infrastructure that is not compatible with the payment message, then I don't think that's an efficient payment. That's something, if something gets held up and doesn't land for 3 weeks because of the information's poor, then that's what the focus needs to be. So I think our customers now are coming to us and saying, look, there are some cases where money needs to land there instantly, and that's great. You can get that through FPS, SEPA Instant, all these sorts of different rails. But actually, is it important to me that I know that payment lands in 2 hours' time? I know it will land. And actually I'm okay with it getting there in 2 hours as long as all the information's correct. Then ultimately you just need to understand what customers want.
Yeah. And of course, building on that, there's the cost of when the payment actually arrives. I'm thinking about the volatility in currency markets. Throw that into the mix. What implication does that have?
Well, exactly that. You can think about, I can get my money there instantly and it's going to cost me a few quid, but actually money markets move in nanoseconds, right? And the volatility of currency pairs, especially exotic currency pairs, can be huge. So if you're remitting funds back to sort of Asia or Africa, you can see big swings, especially if you're sending large sums of money. It can start to cost you a lot. You then layer that over with sort of whether or not you're going to get charges from when money lands, auto correction fees and conversion fees and so on. You're going to find yourself in a position where actually just focusing on speed and just focusing on that payment execution could end up costing you a lot of money. So we work with our customers to help them sort of think about that moving forward. Think about where the market's going, when funds need to land, what they should be thinking about moving forward. And the more businesses can plan, the more they can not just manage the risk and the compliance requirements, they can actually start to build in sort of FX hedging capabilities and contracts that will help protect their bottom line.
Now, there's a lot of focus here at Money 2020, as always, around cross-border payments, what we've been talking about here. Where are things still going wrong within cross-border payments?
It's a good question. I think ultimately it's about trying to get money movement overseas in real time. I think is something that is always going to be a challenge, not least because you've got different regulatory systems, you've got the interoperability of those payment rails, you've got correspondent banking that's going to be holding up payments. People want to talk about real-time money movement, but got to accept the fact that there are political aspects to that, in terms of currency controls and liquidity controls that are in place on an individual country basis. So they're sort of things that we've got to try and navigate. But access to liquidity on a global scale is also a challenge. Being able to maintain sufficient pools of liquidity locally to be able to distribute funds locally is a massive challenge for organizations and other fintechs in the space. So when we get to a stage where people are looking to introduce stable coins, that's great, that's fantastic, but that might move money instantly, but you're kind of giving up a lot of the fraud controls, risk controls around protecting our customers. So there's only, if you're going to move money in nanoseconds, which is essentially what this infrastructure is looking to achieve, right? How are you going to make sure that funds are being screened properly, that there's adequate data in there? Ultimately, you've got rules in the UK, for example, where you've got APP fraud reimbursement requirements, right? So I've got to send the payment instantly, but also if it's fraudulent or there's any sort of issues there, I've got to reimburse the client 50% instantly without question. And if I want to challenge it, I've got to prove gross negligence. That friction and that tension between what the customer wants and what the regulation requirements are, I think is a challenge that we've all got to come together to work towards, because ultimately the two are incompatible.
And let's just finish up on regulation, which you were referring to there. It's moving very fast at the moment. Is that holding you back, or does that provide a competitive advantage if you get it right?
I think the latter. I think often new regulations, I think, can be perceived as something that is stifling innovation, which I think in reality isn't. I think if you can do things properly, and at IFX we talk about winning properly, and it's all about sort of meeting regulatory requirements, putting in the work, putting in the policies, the processes, and the controls around payments. I think if you can invest in that, you can really make a difference. I think we're at a time now where, as we said earlier, moving money at speed and instantly is sort of an expectation. I think we now live in a world where people want confidence from their money movement. They want that assurance that the money's been screened properly, if there's an issue they can get it back, and that the right controls are around that. So if you can really lean into that and you can put in place the right work with third-party providers who can screen that all in real time, create a good user experience that still maintains that element of frictionless payments, but also puts the controls and infrastructure around the concerns and screening that data, then I think you can get a real USP in the market around that safety around that sort of payment methodology.
Sounds awesome. Well, listen, good luck with all of your efforts here at Money 2020 this year.
Appreciate it.
Will Marwick, thank you for joining me on the podcast.
Thanks.
Well, very pleased to say that I've been joined by not one, but two guests from Authentics. I have Yair Tal, who is the Chief Executive Officer, and Carol Grunberg, who is Chief Partnerships Officer. So welcome to you both.
Thank you for having us.
Thank you. Good to be here. Thank you.
Yeah, let's start with you. Your session here at Money 2020 is titled How to Think Like a Fraudster and Protect Like a Pro. And that's all about getting into the mindset of a fraudster, as I understand it. So tell me, how do you do that?
So what we're seeing is we're seeing a different type of companies that are coming over to us, and they have a different motivation for why they need our services. We would start with any company that they are under different or specific regulation that they need to follow, anything on the compliance side, and it will go all the way to someone who's exposed to risk, finance side, account takeovers and things like that. And with the same equation, you see that the fraud is a different fraud and the risk is a bigger risk as you move on into the finance side. And you will see that you have different fraud cases and different persona who is actually being the risk for the companies, and you want to reply and you want to make sure that you're being proactive based on the appetite. And why don't you use the entire tools from day one? Because you don't want to impact the user experience. So you don't need to be as tough when it comes to compliance and regulation, but you definitely want to go as deep as you can when you're exposed to account takeovers and things like that.
Now, in that session, you spoke about the benefits of simulating fraud attacks. So how do you actually go about that? How does that work in practice? And what weaknesses does that reveal that wouldn't have been noticeable otherwise?
For us, I think we're all wearing the T-shirt that we love fraud, right? We love fraud. And it's actually what keeps us young. And every day when we're waking up, we are realizing that someone created a different type of fraud that we need to be aware of. And we want to make sure that we are one step ahead of them. So we need to be creative more than them and see what is coming up next. So we took a different persona that we know that some of them are going after the volume, like a big volume, small transactions that they are only trying to get to open many users so they can be as a fraud as a service to other that want to do the big fraud. While we see on the other end, we see the most sophisticated one that are going to take a big loan or they're going to try to steal some data, and that's going to be way more complicated than that. So we try to take some samples of things that we see during on a daily basis of where we see different attacks, how it's affected the companies, what are the risks that they are exposed to, and then what is the next thing we should do in order to prevent fraud. And it's endless. With you see a deep fake and AI generative for creating a different fraud, and you want to use the same tools or even better than that to be there to stop it and to manage it. So it's when we are presenting it, we are going after the different type of personas and the risks and the tools that they're using and trying to come up and show what are the results and how do you overcome it. So first, we do it every day. That's what we do. However, you need to understand that when someone is trying to commit a fraud, they would act very silently at the beginning, and slowly they will start to operate. So you want to catch them before they operate. So you see the anomalies, you see their behaviors, you see some patterns that you didn't see before. So it takes time to catch them when they start acting, and you want to be proactive and catch them before. So it's you're asking how often do we see them? We see them every day. How often we see new patterns? Almost every week.
Carol, now moving to you. In your session, which was titled How the World's Biggest Brands Fight Fraud, you talk about fraud becoming machine-driven at a massive scale. So how is this changing what brands now require from onboarding and identity verification?
Brands almost need to look at fraud as an industry in and of itself. And so certainly what's happening is right now, it's not just about what is happening on their platform. It's what is that person or that entity, synthetic, AI, human, or otherwise, doing across platforms. And a lot of brands really have visibility into what's happening on my own properties. So that's where we come in and we work together and we look at, okay, but what other signals are happening around that individual? That individual could look completely authentic, or that identity on one instance, but then you see some anomalies or some risk signals happening across the ecosystem. So it's really understanding and thinking about it as an industry, not just is it a yes, no for this one instance on my platform.
And we've been talking a lot about the different fraud threats that are out there. So let's talk about deepfake synthetic IDs. What does this type of fraud look like in the real world, and how difficult is it to detect during the onboarding process?
So we just issued a report this month that looked at 60 companies around the world, huge brands, and trying to see what we found. And one of the things we found is there was one instance where we saw one company attacked 1.3 million times in one day. So it's exorbitant. It's mind-blowing. And we also identified that 3 different fraud rings were operating simultaneously around the world trying to attack. And so now you are into a world where it's exponential, the amount of fraud you could be happening at once. And it could be one company could have different geographies they're operating it in. One could show up as accurate, and another one, there's like a signal that we would get to say, wait a second, let's think twice about this. Yeah.
And you guys are at the front line of fighting fraud. So I'd be really keen to hear both of your views on what some of the emerging fraud threats out there are, and of course, the best ways that we can counter them. Yair, maybe we could start with you.
First, I think we're all moving into the agentic world, and we know that we will see more and more agents acquiring on behalf of their on behalf of humans. And we know that this is where we need to go. We're already there, and we know that this is going to be a big risk, because how do you identify, like, we were trained to block AI the entire life, everything we did, and now suddenly AI is legit. But you want to make sure that you are passing the good ones and you're blocking the bad ones. And we know that as we progress, this is going to be a big challenge. You do, in general, our mission statement is to enable businesses to grow and not to block them. And you need to adjust and to make sure that you are relevant for agentic AI. And this is where we are focusing a lot on our resources today.
And the final word to you, Carol. What emerging fraud threats are you seeing at present?
How do you associate an agent with the user, and who owns the risk and the liability for that? And I think there's one projection that by 2030, over the next 4 years, up to 90% of commerce will be done through some sort of agent. And so I think that's a huge opportunity for us. It's also a big risk that gets opened up. And so it's exciting to double down on.
And let's leave that there. So thank you to you both, to Yair Tal and to Carol Grunberg, for joining me here on the podcast. Thank you both.
Thank you for having us.
Thank you very much.
Well, I'm very pleased to say that Keith Grose has joined me. He is the UK CEO of Coinbase. Keith, welcome to the podcast.
Thanks for having me, Graham. It's great to be here.
Yeah, this is awesome. So let's have a chat about your panel first, which is tomorrow here at Money 2020. And it is titled The Banking Stack, Exploring Embedded Banking Operating Models. So what are you hoping to share in that session? What does this new stack look like?
I mean, I think the biggest thing that I'm trying to get across is traditional finance and decentralized finance are starting to merge.
Yep.
And so you're seeing a lot of the sort of blockchain rails appearing behind the scenes on lots of use cases, and lots of crypto players are integrating more normal fiat services. So I think embedded banking is going in both directions now, which is fun.
Excellent stuff. Now, what we're looking to explore in all of these interviews today is some of the identity-related challenges that the respective brands we're speaking to are facing. So what's that looking like at Coinbase?
I mean, it's something that we spend a ton of time on. I mean, we have millions of customers. There's thousands of customers onboarding every day. And in this new world, you're seeing more and more fraudsters with different tools. You know, you can now AI generate a passport. And so you have to really get good biometrics, work with great vendors. And also for us, we're running our own AI models, our own machine learning models on all of our data points. But it's a constant cat and mouse game. I think fraudsters are getting better, and so your detection has to get better as well.
Yeah, and how do you do that? How do you keep one step ahead?
Well, hopefully we're always keeping one step ahead. The biggest thing is, like, we have great engineers focused on it, and we also go multi-vendor. So we work with all of our vendors, folks like Umio, Onfido, Authentics, and others to improve their models. But then we're always running like regression learning on the back end on our own stuff to figure out, hey, how are we detecting fraud? How are we catching it quickly? And how are we blocking it? And then also data sharing and working with law enforcement. So like when law enforcement detects some new vector, they're talking to us, or if we detect it, we're sharing it with them. So we actually just recently helped bust a big ring in the UK and rescued, almost $45 million that had been frozen by fraudsters, and working in partnership with law enforcement. So it's things like that where, you know, it's not necessarily pure identity fraud, but you're having to really focus on catching people because they're always looking for what the new tools are.
And how long was that process to catch them? Was that over a long period of time?
No, it was a sprint. Like once we detected it, it was a sprint within a month. So we worked in the background. Yeah.
Okay, awesome. Well, you referenced some of the challenges there that are there as identity becomes harder to verify. So more of a kind of a general point, philosophical point, if you like, about what does trusted identity need to look like nowadays?
Well, I mean, I think I'll probably take a more blockchain native approach, but I think, well, I'll say this first of all, like trusted identity is going to be a moving target because I think the things that you used to think of how you identify yourself are getting more and more difficult, right? It used to be a picture, now you need a passport. So just coming into Amsterdam, now it's fingerprints. It's like you're moving into, you know, more biometrics on device type of things. What I think we need to move towards is also zero knowledge proofs and ways that we can protect people's data. What I mean for this is, can you prove you're 18 without sharing all of your data, you know, online somewhere where it can become a honeypot for fraudsters and be used elsewhere? I think we need more and more of those type of use cases. And then I think we need to think novelly about what does it mean to prove your identity, because technology is always going to be moving forward. And I think anything that you can use to prove yourself, a fraudster can also use to prove that they're you. And so you need to think about how do we protect that by revealing as little information as possible to access the services we need.
And take us behind the scenes a little bit without revealing too much, but about how you're using AI to detect and prevent fraud.
Yeah, I mean, it's in a few ways. So we're using it at the front end to basically provide services to customers, make it really easy for them to report things for us on like the customer support side. We're using it to detect and run machine learning models and then like highlight issues with those machine learning that those things identify with all the signals we have from a user. Yeah. Like, is a user account suddenly showing up in a different country, or are you accessing multiple accounts at the same time on different devices? Yeah. All of those signals are things you immediately block. And on the back end, it's helping our compliance team actually pull together when you see issues and get them in front of law enforcement faster. So we have our own agents helping sort through all the data we have and saying, hey, here's issues, package it into a report, let's get this over to law enforcement so they can help tackle it. Right. So right through the stack, AI is starting to permeate.
Yeah, and as we spoke about earlier in this conversation, let's just finish up on this, whether this is a winnable battle, in your opinion. Obviously, AI, you're using it to great effect at Coinbase, but as we said, the fraudsters are using it as well. So how is that going to all map out?
I mean, I think fraud, to be honest, is just the never-ending story. I think like it will always be a cat and mouse game, and you have to constantly be upgrading your systems. And I think the other thing we have to be careful about with regulators is like you need to put your arms around this while also making sure you don't create further issues for yourself, right? And I think that's the trickiest part of like when you're doing KYC and AML, sometimes you can actually accidentally create risks by doing that. And so I think finding that balance, working with all the different regulatory bodies, but I think it is a winnable battle temporarily. Is it a winnable war? I think it's going to be a never-ending war, to be honest.
Yeah. Where we stand now, is it, are we seeing genuine improvement in this area? Are we seeing fraud come down?
100%, because I think there are tools now with AI that make it easier for you to catch fraud and combat fraud. And so while fraudsters are using them, I think companies, as they get in front of them, actually can do a lot more and have a lot better tools. And I think that's getting shared around amongst all the security and tech officers to basically figure out how do we beef up our systems. And I do think it's heading in the right direction.
Yeah, and as you said, the fraud ring that you just managed to disrupt. So
we're out there trying to bust the bad guys.
Clearly something's working, so you're doing okay, yeah. Well, that's awesome. Thank you, Keith Rose, for joining me on the podcast and talking about all that.
Thanks for having me.
Yeah, pleased to say that Robert Bunick has joined me. He is CEO of Unza. Robert, how are you today?
Good.
Yeah.
Happy to be here. It's interesting to do a podcast here on a stand like this.
Yeah. As you were saying, it's a home fixture for you. You're born and bred in Amsterdam.
Exactly. So it's always good to come back, sleep in my own house.
Yeah, absolutely. Now, let's talk about a conversation that's happening here at Money 2020 and wider about the future of payment infrastructure in Europe. From your perspective, where does Europe stand today, and is there anything that needs to change within that infrastructure?
I mean, it's a big question with not an easy short answer there. But I think the challenge of European infrastructure still is that it's very fragmented, right? So the only schemes that really go cross border are the American schemes, as we all know, and there is very good local initiatives, but as always. The French want to keep their local scheme and put it across Europe, and the Germans want to keep their local scheme and put it across Europe, and that still remains, of course, the bridge to pull. Where I think there's also always a tendency by the European policymakers to look at banks to solve payment problems for them, and banks are usually not the best at solving payment problems. They should look at payment players to solve the payment problems. So I think there's still a lot of road to go, but yeah, all the capacity in-house.
Okay, and then moving on to another big talking point here at the event, which is agentic commerce. So what are the challenges that still need to be overcome in that space? I mean, if we open up this agentic world, there's potential for mistakes, fraudulent transactions. What are your opinions on those areas?
It's all about agentic nowadays.
Yeah.
So there's a lot of conversations about it. I think it's still very much in motion where it will go. But within agentic, of course, you have different stages. Where the final stage is agents buying from agents without any sort of approval. I think that is still for adoption quite some time away.
Yeah.
Short term, it is quite close to be able to just have the agent do all decisioning for you. But at the end, there's still a button you need to push to actually prove the transaction, and that one is not that complex within I mean, the patterns of fraud will be very different, but in essence, there's still, it doesn't open the door as much as if you just have agents trust agents.
And from the agentic side, is it more the technology or the customer acceptance that needs to be put in place at present?
Well, the technology is still fragmented, right? So that needs to settle a little bit to come to accepted standards and ways of pursuing it. And then, of course, the big one is acceptance.
Yeah.
And that one is often underestimated.
Yeah, absolutely. It still seems a time away, doesn't it, that we are going to be, making high-ticket purchases using an agent. For me as a consumer, that still seems a little while away.
But it's also how you define it. I think what is quite close is websites themselves having agents for that website doing the payment journey for you as well, right? And helping you browse the website for whatever you're looking for. So I think that is quite close, and that will then also be connected to payments, and that's really the first step in agentic commerce that's quite easy to adapt.
And AI as a whole, how do you see that influencing merchant onboarding and then also fraud prevention as well?
I mean, it's depending what you call AI. I mean, that part of AI has been there for ages, especially in fraud prevention, predictive modeling there. Machine learning has been something that's been around for a while.
But yet the fraud still keeps rising, doesn't it? So it obviously hasn't been as effective as it could be thus far.
Fair. I think it's also rising not just because of the fraud system not being effective. It's the fraudsters becoming effective at a greater pace. I think that's definitely where large language models will probably have certainly short-term but also long-term effects on increasing fraud levels. And you need that logic to fight the logic on the other side, right? So that's where we'll become a big role in the ever-developing fraud prevention methods and how you look at it.
Yeah. Well, what does that look like then? What does an effective fraud prevention strategy look like today?
Well, it depends a bit on the risk that you're trying to mitigate.
Yeah.
So we at Unzer, we have, for instance, a buy now, pay later product, which is at the end it's consumer credit risk, which is a very different risk than trying to stop in an online digital transaction, trying to stop fraudsters. So it depends a bit on what risk you're trying to tackle. But all in all, it's always the play is always the same, trying to take out fraud, with at the same time trying to have as little as false positives as possible. And I think the second part is of course always where the challenge is.
Now merchants are always looking to deliver fast, seamless payment experiences, aren't they? But how do you balance reducing that friction with maintaining those strong risk controls?
Again, it's about finding the balance, right? You will not. It's never going to go all the way one side or the other. It's very easy to stop fraud, right? You just put bars in front of your store, and then you'll never sell anything, but you also don't have fraud. But at the end, we all want to grow. We all want to have fraud. For no fraud, for that you need seamless payment experiences. So it's how do you keep the balance, and how do you keep fraud at an acceptable level? Because no fraud means also no turnover.
And just finish up by telling me, from an Unzer perspective, given all that we've covered in this brief conversation today, where are your priorities? Where are you trying to help these merchants?
So we at Unzer, we're really providing a merchant ecosystem that allows them to sell their goods or services wherever they want to sell, right? Whether it be online, offline, over the phone, and soon also to agents. Right, so we continue on that journey, helping them and making our services deeper. We recently launched a bank account with an Unzer card, allowing them also not just with money in, but also money out. And we'll continue to make our merchants happy by helping them digitize their commerce.
Well, best of luck for that, and best of luck for the rest of your time here at Money 2020. Robert Bunick, thank you so much.
Thank you for the time.
Joining me now is Alex Coppersmith, who is Strategic Partnerships at TRM Labs. Alex, how are you today?
Yeah, well, thank you, Graham.
Great to have you on the podcast. Let's start with an introduction to TRM Labs, if you don't mind.
Of course. So TRM, we're a blockchain intelligence company, and we help financial institutions, crypto businesses, public sector organizations and agencies detect and investigate fraud and financial crime across blockchain networks.
So let's kick off with that then. How is the nature of financial crime changing as more activity moves on chain?
Yeah, so I think one of the biggest shifts that we've seen with financial crime is it's gone cross-rail, right? So the clean separation between traditional financial crime and crypto fraud, that's pretty much gone. The same fraud rings that are running, authorized push payment fraud, scams, romance scams, pig butchering, they're moving all of their proceeds on chain. As one of the main topics for today is, all about stablecoins. Stablecoins are becoming more and more the mechanism of choice. Within hours of funds hitting, the first accounts, they're being moved on chain. A fraud team that's watching, only the fiat side of things is, just watching the front door. Whilst all the money is walking straight out the back. So you really do need to monitor both sides of the rail, or you're not really doing fraud detection, you're just documenting it.
Okay, so in this on-chain world, how are we thinking about identity and trust then? Because obviously in traditional finance, identity is tied to individuals, but in crypto, it's tied to wallets and behavior. So how are we going to map that out?
Yeah, good question. So in TradFi, trust is established at the front door, right? So, a new user is onboarded, you verify that person, you then open them an account, and, the system checks whether, they're real. The account is real, and you monitor for anomalies after that. Mm-hmm. On-chain, it's almost the inverse. The wallet is the entity that transacts. And it's, trustworthiness isn't, a one-time check. It has to be continuous. So a clean wallet, today could be exposed to a sanctioned mixer tomorrow. And the on-chain trust has to be, behavioral and ongoing, not just a point in time or just identity map. So in practice, identity and on-chain intelligence are complementary, not substitutes. The identity layer, will tell you if the human is real. The on-chain layer tells you whether the wallet is trustworthy at the point of transaction. Given and able to see everything that it's touched. And in this world, you need both. The institutions that are doing this really, really well, the ones who have fused the two together. The identity at onboarding, on-chain intelligence, throughout the life cycle of the relationship. The other piece is on-chain intelligence catches things that just checking identity cannot. A coordinated fraud network, using synthetic and stolen identities, might pass every document and biometric check, but they're a fraud network. The on-chain, will be able to see, the 50 plus unrelated accounts all funneling into the same handful of consolidated wallets. So whilst the identity pattern is invisible at the identity layer, it's very obvious on-chain.
Now, tell me more about the new AI-driven investigation platform that you're launching at TRM Labs. And how specifically AI is changing the way analysts track and understand these complex financial crime networks.
Yeah, so honestly, the advance of AI is mostly changing the economies of investigation more than anything else. The work of tracing funds, clustering wallets, takes hours, days, sometimes even weeks for very skilled analysts. And you'd have a specialist team, working a few cases, to monitor for fraud, and that doesn't scale particularly well. What AI is enabling is collapsing that timeline from, days to hours, minutes. Analysts are going to be able to ask in plain language, hey, trace these funds, find related wallets, identify consolidating addresses, and where this network cashes out. And these systems are going to be able to reduce the hours taken for manual graph work. Every output is sourced, is auditable, and we've been able to do it in such a way that the reports hold up in court and in regulatory reviews. I think that the really important piece and point to remember is humans they're staying in control, right? The AI is the force multiplier for analysts, not the replacement. The judgment, context, the decisioning about what to do with the intelligence still has to depend on human expertise. The routine investigative grind that that can lead to burnout and is the bottleneck, that's going away. So for fraud teams, the implication is that an on-chain investigation, stops being a specialist function and becomes a very normal and integrated part of a fraud investigation workflow.
And then let's just finish up by looking into the future, if we can, or what we can anticipate. What do you think effective financial crime detection looks like, both in these on-chain and off-chain systems?
I think it has to be a single operating picture. Today institutions are still running, onboarding, fraud, AML as separate work streams, separate tools, separate teams, and a fairly hard wall between the fiat and on-chain world. And that was okay when crypto was just a small adjacent risk, but that's no longer acceptable given the speed fraud rings and other illicit actors move money across the world. So I think the effective detection looks like three things converging. One, there has to be identity, accounts, and wallet intelligence all in one view. Analysts should be able to look at a customer and understand not just the accounts that they hold, but what wallets that they are linked to and who they've interacted with in the entire life cycle. I think the second one, it has to be real time. Most financial crime detection is still a post-event incident investigation. You flag it, you investigate, and then you file it. With AI and agentic-led investigations, the bar moves to detection is happening at the speed of transaction, and that's going to fundamentally sort of change the operating model. And I think that the third one, which is very key and something that's very at our core at TRM Labs, is the cross-institution intelligence, public-private sector sharing intelligence. Fraud rings hits multiple institutions simultaneously. Those institutions that are sharing signals are going to be able to be ahead of the network. Being able to have a point in time of, hey, we've identified this particular wallet cluster is, financing terrorist organizations. Let's make sure that we make it as difficult for them to off-ramp it. So we'll notify all of the exchanges in the system, all the custody solution providers. Everyone in the network are going to know specifically who that entity is, and we're going to be able to block it. And I think the threads connecting it all is, the boundaries that really define the last few, decades of, financial crime, work has been, moving it from off-chain, on-chain. Those rails have been blended. The financial institutions that are, leaning into, cross-network sharing and have fused it all into a single workflow, they're the ones who are going to keep ahead and be able to stop the illicit funds moving.
Absolutely. Well, Alex Copperstreet, thank you so much for joining me on the podcast.
Thanks, Graham. Pleasure.
A big thank you to all my guests for taking the time to speak with me here on LSEG Risk Intelligence's booth at Money2020. I really hope you've enjoyed this episode, and if you have, then please do give us a positive rating or review on your podcast app of choice. If you'd like to get in touch with the show, you can do that via the contact form at csuitepodcast.com, or you can find me, Graham Barrett, on LinkedIn. But for now, thank you for listening, and goodbye.